Hi all, welcome to another video. So in today's video, I will be talking about the only mutual fund that you need to invest for long term. Right? I'm sure that most of you are aware of what is a mutual fund. I'm not going in detail about that. So I will just talk about who are the people who should invest in mutual funds, right? So to answer that, it's primarily comes from the fact that if you are someone who doesn't have that time to study about individual companies, right? Those people, and also they want some exposure to the stock market, especially equity investing. Such people should consider investing into mutual funds, right? So you don't have time to study about individual stocks, but at the same time you want to be part of the long term India growth story of Indian stock market. So such people can invest into mutual funds, because mutual funds invest your money into the publicly listed companies of India, right? There will be a fund manager who will be handling all the buying and selling on your behalf, so you don't have to worry about all those decision makings. So now comes to different categories of mutual funds. I have written few points so that I won't miss anything. So there are different categories of mutual funds. Say for example, equity fund, right? Equity means 100% equity funds. Like the fund manager will invest your entire money into stocks. And under equity also there are large cap funds, mid cap funds, small cap funds, multi cap funds. So as the name suggests, depending upon the category, the fund will be allocated into those kinds of stocks, right? And also there are other funds, debt mutual funds, where there are very limited exposure to equity. Rather they invest the money into debt instruments like government bonds or treasury bills and things like that. So there are different varieties of, or different categories of mutual fund, but the mutual fund that I am trying to explain today, or the mutual fund that is the best for long-term investing, is index mutual fund, right? So I will explain it in detail. What is an index fund? I'm sure again most of you must be knowing about index fund, but just for more understanding purpose, index funds are nothing but a mutual fund that tracks the particular index. Say I am talking about Nifty 50 or BSC 30, right? Though Nifty is the primary index of our stock market. So the top 50 listed companies will be present in the Nifty 50 index. So when you say you are investing into Nifty index fund, it it means that your money will be distributed into those 50 stocks, like the best 50 companies of India, proportionately, like the proportionately to the weightage in which those companies are present in the index. What do you mean by that? Proportionately the weightage and all, right? So weightage is nothing but, in India the biggest company by market capitalization is Reliance. So Reliance has largest weightage in the index. Out of the 50 companies, if you take, say a certain percentage will be allotted for Reliance, because that's the biggest company by market capitalization. Followed by, I think right now the second largest company is HDFC Bank. Then there is Bharti Airtel, TCS, ICICI Bank. All those are big companies, right? So depending upon the weightage of these companies in the index, your money will also be allocated accordingly into this particular index fund. Now, why I am thinking that index fund is the best for long-term investing, right? You take last so Nifty, if you take from 1999 till today, right? Nifty has given handsome returns, like on a CAGR basis, 13 to 16 percentage, in that range Nifty has given returns, right? And if you are someone who believes in India growth story, right, that India will grow and Indian companies will grow, and subsequently Indian stock market will also grow, then to ride that growth journey, if you want to participate in that growth journey with limited risk, right, rather than putting into direct stocks, good company, even though if it's a good company, you never know, right? So if you want to participate in that India's growth story, it's always best to invest into an index fund. Now you can argue that, so now I am not talking about um, extra returns or generating alpha or anything of that sort. No, I am talking about a conservative return, say maybe 12%, 12 to 14%. Uh, Again, there is a caveat for that. You should invest minimum of 10 years, that's for sure. But from my thought process, if you can invest for 20 to 25 years, right, without breaking that SIP, without taking any single money from that particular index fund, uh, depending upon how much money that you are putting, depending upon the market cycle, the returns, you will have a very good return. You will have a very decent corpus after 20 to 25 years. Because, like I said, right, if you are believing in the India growth story, definitely our markets will also grow in 12 to 14 percentage on a long term basis, long term average, right? So, there is no tension for you. Uh, Whenever you are receiving a salary, directly you put some chunk into the mutual fund without touching it. Whatever comes in your way, right? There will be occasions where you need money, but if you are making sure that you are not touching that, definitely this I am talking from my own personal experience. Though I am very late and I was lucky for that market rally post COVID, right? 2020. Even then, there was a brief 1.5 years period where the market was plateaued from I think 2021 October till 2023 March or so. I continued investing into the index fund, and all the dollar cost averaging happened, and right now I am sitting with a very decent profit. Uh, let's not talk about profit, but when you calculate in terms of return, right, I am sitting with around 13% XIRR returns. So I am not going to touch that money, whatever happens, right? I mean, of course, you can't predict that, but I'm saying that's the last way, or that's the last thing I touch if I am in need of money, right? So index mutual funds are the best if you want to invest for long term, and there are different rules also. Say for example, I'm sure most of you are aware of the rule of 15, right? So if you are investing 15,000 per month into a mutual fund for 15 years with 15 percentage of annual returns, your money will become 1 crore rupees, right, after 15 years. So it's like rule of 15, 15,000 per month, 15% return for 15 years turns into 1 crore. So you can't predict 15%. I don't know 15% is actually possible, but it basically what it says is that if you are disciplined, definitely you can reach that 1 to 1.5 CR corpus with a decent allocation into an index fund from your salary for 15-20 years, right? And this approach makes investing simple. See, what I'm talking about when I say simple is that the decision making, the headache that you have to go through, right? Which stock to buy or which mutual fund to invest into, how many mutual funds to invest into so that I can get that return. So if you are bit conserved about your returns, right? So 12 to 13% is not like some big returns if you are thinking about stock market, right? There are people who generate 18 or 20 percentage. there are people out there in the market. I am not denying that. But they are taking that extra risk. They have to do little extra work also. It's not easy to make such kind of returns, right? You have to be present in the market. You need to understand what's happening in the world. I mean, you have to be an active investor. But if you're a passive investor, if you are fine with 12-13% returns, uh, like a relatively risk-free return, I would say, if you're especially if you're investing for long term, 15 years, 20 years, definitely, you can make a big corpus out of this. And it's very simple in the sense that your decision making is not affected much. Now, to select a particular index fund, most of the banks, most of the NBFCs, or there are so many companies, financial institutions that offers index fund. So the only thing that you have to check before investing into an index fund is which company has minimum expense ratio. Expense ratio is nothing but if you are investing into a particular mutual fund, the fund manager or the company will take a small portion from your investment. It's like a commission. Yeah. So which company has least expense ratio plus which company has good track record. Of course, maybe there will be companies who, to attract new customers, they give maybe zero expense ratio, but there will be questions around their credibility. So you don't have to take such risks. So even if the expense ratio is reasonable, go with a good institution, good company where you can put in your money, right? So that's what I want to talk about in this video, the beauty of index investing. All the renowned investors, if you take, Warren Buffett, or I quote them a lot because the primary intention of this channel is to grow wealth over a long term, right? Through value investing. So they are the masters of value investing, and I admire them a lot. I learned a lot from them, right? So that's the approach that I like personally. That suits me very well, the long term value investing. So yeah, all they say is if you don't want to take that extra risk or extra tension, index investing is the best approach. And you don't have to juggle between multiple mutual funds also. You don't have to put everything. You don't have to distribute your money into multiple mutual funds, and in between then you lose track and everything. If you believe in India growth story, if you believe in our index, Nifty, our stock market, put it into this any one particular, select one company to invest, like whoever is providing, all the banks, like I said, HDFC, ICICI, HDFC, SBI, Axis, Tata, everybody has their own index funds. So select one and invest. Don't touch, come after 20 or 25 years and see the magic, right? So that's what I want to convey in this video. If you are liking my content, as I always say, do subscribe my channel. I will be more regular going forward. I will be uploading interesting videos around personal finance and stock market, the learnings that I have, and I also want to learn a lot from you. I received few comments in one of my previous video where he shared one YouTube video where the person was talking about a potential bubble that's present in the US stock market. We don't know when what will happen, but that was what I'm trying to say is that was something new for me. I watched that entire video and I replied to that comment, and the thing is that ironically, I was not even knowing about that particular person, but later I realized how he was a very experienced investor who talk about this particular bubble and all sort of things. So I am learning, though my channel is small, new, still I am getting opportunities to learn. So yeah, do subscribe, do watch, do share with your friends, and let's build a community around stock market and value investing. I will come up with another video. Till then, take care. Bye bye.